The summer housing market is a critical issue affecting millions of Americans right now. Are we looking at a potential crash, or will things balance out? With high home prices and mortgage rates near their highest points in years, affordability is a significant concern. Stay tuned as we unpack all the details. This could be a game changer for anyone considering buying or selling a house. Prices are high, and mortgage rates are near their highest in years. This makes buying a house hard for many people, especially first-time buyers. With this week's reports on consumer spending and inflation coming up, everyone's on edge because these can directly affect bond yields and mortgage rates. After a less than stellar spring, experts say the housing market will probably stay slow throughout the summer. Whether this means things will balance out or prices will drop more significantly. So, why is the market slowing down? There are a few key reasons. First off, house prices are sky high. Second, mortgage rates are high too. Even though a few more homes are available now, more are needed for everyone who wants to buy. The Mortgage Bankers Association, MBA, tracks home loan applications, and their latest numbers show just how slow things are. Overall, mortgage applications barely moved last week, up by only 0.8%. This means only a few people are applying for home loans, which slows down both refinancing and buying houses. Some good news for those looking to buy a house. Mortgage rates dropped slightly. The average rate for a 30-year fixed-rate loan for up to $766,550 went down to 6.93% from 6.94%. It's not much, but it's the lowest rate in over 3 months. Unfortunately, this slight decrease wasn't enough to convince many homeowners to refinance their existing loans. Refinancing applications stayed the same as the previous week. This might seem odd, but here's why it makes sense. Refinancing applications are up by 26% compared to last year. However, most people with mortgages got them at much lower rates than today's. So, they're not in a rush to refinance now and end up paying more interest. Even though rates went down a little, it wasn't enough to get people to refinance their loans, explained Joel Kahn, an economist at the MBA. Most homeowners are still holding on to mortgages with much better rates. There was a slight increase of 1% in the number of applications to buy a home last week, but compared to last year, it was a 13% decrease. Zillow, the popular real estate website, says the total number of homes available for sale has increased by 18% year over year. But remember, there were way more houses for sale before the pandemic, so more houses still need to be built to meet the demand. Government loans, especially FHA and VA loans, saw an increase of more than 2% over the previous week. Kahn added, buyers who qualify for these loans are trying to take advantage of the recent dip in mortgage rates. Mortgage rates are expected to stay about the same this week. However, everyone is keeping a close eye on Friday's reports about consumer spending and inflation. These reports are crucial because they impact bond yields, affecting mortgage rates. Here's the deal. If the reports show that inflation is worsening, bond yields will likely increase. This would raise mortgage rates, making buying a house even more expensive. On the flip side, if the reports show that inflation is under control, bond yields could go down, leading to lower mortgage rates and more interest from buyers. The main reason the housing market is slowing down is simple. Houses are too expensive for many people. High home prices and mortgage rates are challenging, especially for first-time buyers who might also be dealing with student loan debt and the rising cost of living. Many people interested in buying a house just can't afford it anymore, said industry analyst Sarah Jones. The combination of high home prices and mortgage rates makes it impossible for them to buy. The future of the housing market depends on a careful balancing act. The Federal Reserve is expected to keep raising interest rates to control inflation. While this helps cool down the housing market and make homes more affordable, it could also lead to a recession, further dampening buyer demand. The housing market is at a crossroads, Jones continued. The coming months will be crucial in determining whether we see a modest adjustment in home prices or a more significant downturn. Most housing experts think the market will likely experience a period of stagnation throughout the summer. This means things will slow down but stay relatively stable. Whether this leads to a more balanced market with more affordable homes or a steeper price decline remains to be seen. Advice for home buyers. If you're thinking about buying a house, here are a few things to consider. Prices might come down a little. With fewer buyers in the market, home prices could start to decrease. However, this isn't guaranteed and may take some time. Mortgage rates are unpredictable. Depending on inflation and the economy, they could stay the same, go up, or even down. Less competition. With fewer buyers looking, you might not have to compete with as many offers on houses you're interested in. Advice for sellers. If you're thinking about selling your house, keep these points in mind. It might take longer to sell. With fewer buyers actively searching, finding someone to buy your house could take longer. Be flexible with pricing. You can attract more buyers if you're willing to negotiate on the selling price. The market could pick up later. The slowdown might not last forever. The housing market could bounce back later in the year or next year. The key for both buyers and sellers in this market is patience. If you're buying, take your time with something and be prepared to wait for the right house at the right price. Thank you for watching the video. If you found this information helpful, please give us a thumbs up and subscribe to our channel for more updates.